Hey guys, welcome back to my channel. In this video you win a few trades here and there, but lose again and again and you are unsure what is causing the problem. You see all these traders making huge returns on social media, but for some reason you don't get that much success. Well, let me tell you a secret. You have learned to identify the trend, but you do not know how to properly time your entries and exits. How many times have you entered a trade and it went up to your stop loss, but right after it reverses in your expected direction and goes deeper and you see all potential profit wiped out? Your gurus may have told you to use the traditional RSI to know when to exit your trades, but what they didn't tell you was that RSI was created in 1978. It is over 45 years old. I'm going to share with you today a modern and updated way to time your entries and exits so you don't miss out on those profits again. Go ahead and open TradingView. Navigate to the Indicators tab and search for Trendilo open source, add it to your chart. This indicator examines how much prices change, smooths out sudden jumps or drops, and then utilizes a special average called Arno Legu moving average. This average is subsequently compared to a range to determine the trend. If we access the settings by clicking the gear icon and moving over to the Styles section, we can disable the background plots. This allows us to clearly observe in comparison to the levels of the traditional RSI, how dynamic these new levels are and how they adapt to the price volatility. This adaptability is crucial because volatility is not static. Let's enable this plot so we can understand how this indicator determines trends. When this plot is above the zero line, it indicates a bullish price trend. Conversely, when it's below, it signifies a bearish price trend. Therefore, a crossover above or below either of these lines can be an indication of a change in trend direction. By re-enabling these background plots, we can also observe how once the price crosses above or below the zero line and starts to trend, the dynamic bands are employed to ascertain if price is overbought or oversold. These levels, being dynamic, allows the detection to be very accurate. If we quickly revisit the settings, we can observe that our initial two options are source and smoothing. The source parameter governs the primary metric employed for calculating the indicator, while smoothing regulates the indicator's responsiveness to price spikes. If I increase this value, you'll notice a reduction in the prominence of spikes at the upper and lower thresholds of overbought and oversold levels. This adjustment can prove particularly advantageous in volatile markets. Moving on, we encounter the look-back window settings, which determines the number of bars considered in the calculations. By default, the indicator is grounded in the calculations of the past 50 bars. Typically, you won't find reason to adjust this unless you're attempting to smooth out price data. Increasing both the look-back window and the smoothing factor can aid in signal refinement. Additional options are available for fine-tuning signal calculations. However, we'll only enable the bar color option in this case. This will enable us to visually observe on our candlesticks when the price is in overbought or oversold territory. Now, as mentioned at the outset of this video, I'm certain you've experienced situations where you enter trades, the price hits your stop loss, only to subsequently reverse and move in the intended direction. I will now demonstrate how to utilize this tool to assist you in precisely timing your entries and exits. This is crucial because what often occurs is that you're entering trades prematurely and exiting them too late. Before we delve into the strategy, don't forget to subscribe to not miss out on future videos. Your support really helps the channel. For our strategy, we will require the addition of another free indicator to our chart. Navigate to the Indicators tab and search for Hypertrend, specifically the one developed by Lux Algo. Proceed to click on it to add it to your chart. The Hypertrend indicator offers a real-time estimation of the underlying linear trend within the price movements. Support and resistance levels are derived from this estimation, presenting potential trading opportunities within the overarching trend. The slope of the hypertrend can be used to understand the direction of the trend along with its position above and below the midline, helping to determine whether we are looking at buying or selling opportunities. In our strategy, we will employ the hypertrend indicator as our primary tool to detect trends, complemented by the trend ILO indicator to execute entries. Our approach involves using the 1-hour time frame to identify entry points and the 4-hour time frame to establish the structural bias of the trend. Let's take a closer look at our strategy. It is important to pay careful attention here. We will start by using the 4-hour time frame to establish whether the market is displaying bullish or bearish sentiment, which will be achieved by looking at whether the price lies above or below the midline of the hypertrend. Going forward, our action involves monitoring price retracements in the opposite direction of the hypertrend. During this phase, we would anticipate that the price will either become oversold or overbought as per the prevailing trend. Execution will be triggered once the price initiates movement out of this zone, and we will maintain a risk-to-reward ratio of 1:1.5. To illustrate this process once more, let's consider an example. We shall wait for the hypertrend indicator on this time frame to also indicate a bearish trend. Subsequent to this alignment, our attention turns to price retracements that brings it back above the median line of the hypertrend. Once the green candles cease and the retracement demonstrates signs of subsiding, we will trigger our trade. The stop loss will be set above the most recent swing high, while the risk-to-reward ratio will adhere to a 1:1.5 structure. In this strategy, the Trendilo indicator serves as our guide, enabling us to enter the chart precisely at the optimal point where price is likely to reverse. Moreover, our trading direction aligns with the overarching market trend identified by the hypertrend indicator from LuxAlbo. This synergy forms a remarkably potent strategy. For those who wish to elevate their trading approach further, an additional technique involves adjusting your positions beyond the 1:1.5 risk-to-reward ratio once a trade has been initiated. Exiting the trade is advised upon the price reaching a significant level of support or resistance. You have the option to draw support and resistance levels from a higher time frame to identify more substantial ones. Alternatively, you can employ an automated tool to determine these levels. By navigating to the Indicators tab and searching for Order Blocks and Breaker Blocks by LuxAlbo, you can access a tool that systematically identifies advantageous support and resistance levels. This tool equips you with high-quality levels to allow your trades to thrive. Feel free to experiment with this indicator to understand its functionality better. We will delve deeper into exploring the intricacies of this indicator in a subsequent video at a later date. In wrapping up, it's crucial to remember that the art of trading is a continuous learning process. The tools and strategies presented today aim to provide you with a more refined lens to analyze and capitalize on market movements. That's all for today. Thank you so much for watching this video. If you haven't already subscribed to my channel, please do so and hit the bell icon to receive notifications about my future videos. I'll catch you all in the next video, and best of luck with your trading endeavors.